Hello students, welcome to Accounting Explained at Accountwise Academy. This is Latha Venkateshwaran. This is the part 1 video on ledger accounts and we are going to learn an introduction to ledger accounts in this video. You can look into the shorts of our channel for question and answers and MCQs for chapter 1, 2 and 3. You should be thorough with the journal entries now. In the previous 3 videos, I have exclusively uploaded only for the journal entries. One for how to journalize, second for how to journalize the GST transactions and how to journalize for IGST transactions. Now, let us see what is ledger. So, ledger is the main accounting book where transactions are classified and recorded. So, suppose if you want to know the cash account balance as of today, what you will do if you have only journal entries? You will see all the journal entries separately in the chronological order and take the cash account separately and write it physically and you will tell the balance to me, right? That and all is not at all needed when you open the ledger account, that is cash account in the ledger books separately. At any point of time you can tell the cash balance very easily. It contains individual accounts for assets, liabilities, income and expenses. All these have individual accounts. Under assets, machinery account will have an individual account, bank account will have an individual account, liabilities, creditors will have an individual account, capital will have an individual account, income, interest income, sales income, everything will have a separate account. Expenses, whatever the expenses, salary expenses, office stationery expenses, any expense you name it, that will have a separate account in the ledger. The ledger organizes transactions by account. So it organizes transactions by account, unlike journals which record them chronologically. Journal does nothing. It records only chronologically, date wise. Information from the ledger is essential for assessing financial position and making decisions. So at any point of time, you can take out the balance of the account and you can tell where your company or where your business stands. Ledgers are structured with indexing and coding for efficient organization and easy access. So each account will be given one code, like for cash account it will be 101 or and capital account it may be 102, something like that. It will be coded for all the accounts and it is very easy and it is indexed in a proper way and it is very easy to access it at any point of time. Format of a ledger. It has first on the top it has name of the account, on the left side DR, on the right side you will write CR, and it has got 4 columns: date, particulars, JF amount on the left side and date, particulars, JF amount on the right side. The account title is the name of the account being recorded. So if you are going to open machinery account, the name of the account is machinery account. Okay, and it is placed at the top of the account format. It is placed in the top. The debit DR side is the left side of the account. Here, see here. The credit CR side is the right side. CR side. Whatever items to be debited will be on the left side, written on the left side, and whatever items to be credited will be written on the right side. The date column, here see date column, records year, month, day of each transaction in the chronological order. The particulars column details the name of the account being debited or credited and references the original entry. Suppose you have bought machinery with a check from, okay, the journal entry will be machinery account debit. Since machinery is an asset, you are going to debit it to bank account. Bank is your asset. The balance is going to be reduced since you are buying machinery, so it has to be credited 80,000 rupees. Here to bank is there, no, that should be written in the particulars, to bank. So that is the debit. So all the debit will start with to and all the credit will start with by. Okay, to bank 80,000 rupees will be written on the amount side. That's what they say here. The particulars column details the name of the account being debited or credited and references the original entry. In the journal entry, whatever you have credited, that will go to the debit side of the missionary account. Okay. The journal folio column shows a page number in the journal where the original transaction was recorded. In the journal entry, what did we see? We saw LF, right? That is ledger folio. In the ledger account, you will see journal folio. In the page number where you have written this journal, no? If you have written this journal, the fifth page, then this 5 will be written here. Folio is page number. Okay. The amount column displays a numerical value of the transaction matching the amount of the journal. Here, what is the numerical value? 80,000. So, you have written 80,000 here, see. Now, let us see the distinction between the ledger and the journal. We open 4 columns: serial number, features, journal, ledger. First, recording order. Journal entry is the book of original entry. This we have already seen, no? And ledger is recorded second. Data classification. Journal is recorded in the chronological order, that is date wise. Ledger is recorded account wise. In the previously, what did we see? Missionary account debit to bank for purchasing missionary. We open missionary account and simultaneously we will also open bank account also. Whatever accounts we write in the journal entry, those accounts will be opened in the ledger. Okay. Legal importance. It is more important journal, whereas ledger is less important. Because why do we call journal as more important? Because it is a source entry. From there only the entry started. So it is a source entry. When we come for legal evidence, we take the journal as the legal evidence. Databases. It is recorded transaction wise. We saw no, each transaction was taken separately and journalized. Journal entry was passed separately. Ledger. It will be recorded account wise. Next, recording process. We call writing journal as journalizing, whereas when we transfer the journal entries to the ledger, we call it as posting. These two things are very important. Remember, writing journal entry is called as journalizing, and writing ledgers or taking from journal and writing in the ledger account is called as posting. Classification of ledger accounts. Ledger accounts are categorized into assets, liabilities, capital, revenues and gains, or expenses and losses. All these are categorized in the ledger accounts. Accounts are further classified as permanent, assets, liabilities, capital, or temporary, revenues, gains, expenses, losses. Permanent means it will be used for more than 1 year. Assets, when you buy a machinery, it will not be used only for 1 day and we will not just throw it away. It will be used for more than 1 year, for a longer period. That is why they are classified as assets, liabilities and capital are classified as permanent, whereas revenues or gains and expenses or losses are classified as temporary. Within that year, you are going to utilize it. That is the difference. When it goes more than 1 year, it is called as permanent. When it is going to be utilized within 1 year, it is called as temporary. Permanent accounts continue to the next period. It will be carried on to the next period. While the temporary accounts are closed at the end of the period, because within that period it is going to be exhausted, right? So at the end of the period, those accounts will be closed. And whatever the balance is there in that account will be transferred to the profit and loss account. Whereas permanent accounts will be transferred to balance sheet. This up to here you just keep it in your mind. Later when we see, you will be able to understand it very smoothly. Permanent accounts appear in the balance sheet. See, this they have told. While the distinction between permanent and temporary accounts is crucial for preparing financial statements. Permanent accounts will go to balance sheet. That is a financial statement. Permanent accounts will go. Whereas temporary accounts like revenues or gains and expenses and losses will be transferred to profit and loss account, or in short form we can tell it as P&L account. To find out the profit or loss, it will be transferred. So these are the two financial statements where the permanent account and the temporary account will be transferred. Posting is transferring journal entries to the ledger, grouping transactions by account for analysis. So posting is transferring journal entries to the ledger. Locate the ledger account to be debited. So we have to locate whatever the account to be debited, enter the date, account, name, journal page and amount on the debit side. So whatever this is the debit side, no, debit side will start with 2. So we have to write date, and whatever the account name we have to write, journal folio number also we have to write, and the amount. Repeat step 2 for the account to be credited. So for the another account, one, if it is a book of 2 entries, no, so double entry system only we follow, no. One account we have debited, another account has to be credited. So we have to locate that account, and on the credit side we have to write the date, and the credit side will start with B, and we have to write the whatever account name it is, and we have to write the journal folio number next, amount, entering the details on the credit side. Reference the ledger page in the journal and vice versa to link entries. In the journal we have to write the ledger folio column, and in the ledger we have to write the journal folio column. Posting is done periodically, weekly, fortnightly or monthly based on business needs. It can be weekly, fortnightly or monthly. I will explain with an example for posting of journal entry to ledger. Same example we will maintain. Machinery bought for rupees 80,000 on 1st January 2020 with check. So 1st January 2020 is the date, and the entry will be machinery is an asset. When you buy an asset, asset value increases, so machinery has to be debited 80,000 rupees on the debit side, and bank is an asset. When you buy, bank balance decreases, so when the asset value decreases you have to credit it. This is the journal entry. Okay, how we are going to post? First I will take the machinery account. Name of the account is machinery account. Date here is 1st January 2020. Here machinery account is here. See, in the journal entry machinery account is there. Right. Opposite to the machinery account is what? Bank account. You have to write that bank account. Okay. Only in the machinery account. What happened to the bank account here? What you have done to the bank account? You have credited here. When you have credited bank account in the journal, if you credit the bank account, then in ledger you have to debit the bank account. Okay. This simple concept you understand, and vice versa. So all the debit side date is 1st January 2020. Okay, all the debit side will start with 2, that I have told you, no, to bank account. Here you have credited. Now in the ledger you are debiting it. What is the amount? 80,000. This journal folio number, whatever page you have written journal in your books, that will be written here. Okay. This is how you will transfer. Now let us see how to transfer to the bank account. Bank is here. What is the opposite of bank here? Machinery. What you have done with machinery? You have debited. So journal, what you have done? You have debited. In ledger, what you are going to do? You are going to credit. Okay. So I write the date here 1/1/2020, and when you are going to credit side will start with buy machinery account. So see, this machinery 80,000. This is how posting will be done. Okay. If you would like to inquire about the online classes which I take, or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.